All right, welcome everyone. Hope you're having a good day. Let's make sure you all can hear me. If you please type the number 1 in the chat box to let me know that you can, I would greatly appreciate it. Thanks, Andrew. Afternoon, everybody. All right. Thank you so much. Yeah, no camera today, guys. Hey, afternoon, Kevin. Brenda, morning, Helen. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right, so let me go ahead and mute that down. All right, sorry about that. Excellent. All right, so we're probably going to finish up a few minutes early today, guys. We'll see how it goes. I pulled my back yesterday doing some work at one of our properties, and sitting this long has become difficult. So I'm not sure if I'll be able to stay the full hour. So we're planning on just a little bit less. We'll see how it goes. If my back is holding up okay, I'm not going to say where. We'll just keep pushing through, but we'll see how it handles it through the end. All right. So here's our agenda for today. We're going to go through our followers page. We'll look at trades for today, which means what trades did you do? They could be funded trades, non-funded trades. Drop them in. Really doesn't matter. They could be they don't have to be today. They can be Friday, Thursday. That's fine. We'll look at economic reports. We'll do a review of the market. We'll look at upcoming future trainings, the weekly training topic, and then your stock review, which is basically, that's the segment right there that to me is one of the most important ones, which is why we put it at the very end. Guys, listen, as much time as we have available to us, that's where we're going to look at candidates. That's where you're going to want to drop your stocks in and say, hey, what do you think about this one? What do you think about that one? All right. So here's our followers page. Make sure you follow along the various social platforms that you frequent to keep up with the latest and greatest content that we put out week in and week out. Today's trades. All right. What trades did y'all do today? Drop them in. Anything. Again, it doesn't matter. Funded or non-funded makes no difference as far as I'm concerned. They're all non-funded trades. All right. I've got 2 from today. Let me grab one other thing first while you guys are setting yours up. I know holiday weekend, everybody's in this take it easy night mode. It's easy to get stuck in that this time of when you have that happen. Those holidays pop in there, it kind of makes things lazy days. So these were from last week, 20 and 21. So this was Tuesday and Wednesday of last week. We didn't do another update beyond that. Right? So we'll do one tonight is our next one because of the holiday yesterday. And we lost $19.50 on Coinbase, and on Tesla, we're up $624. Tesla has been a marvel for us. I'm loving Tesla. Again, it's given me some great setups in there. Absolutely stoked on what we're able to do. These are only 1 contract trades, right? I know it says 10 for the entry, but that's just the way the software was built. You see the stop out is 1, right? And to show you the other side of it, what's going on here? So here's the same trades with a full suite of contracts, so 10s. So Coinbase were down 195, Tesla were up $6,240. So overall, not bad. Hey, Daryl. Daryl said CL long trade. So CL is that crude that you're trading, and SPY long trade. They trade oil. Yeah, crude oil. Okay, that's what I thought. Excellent. Good. So these have worked out well. Today's setups. Let's just shut that down. There we go. Today's setups. Let's go over to Omega charts. I do, Ingrid. That document that you're looking at or we're looking at right there is not something that we share. That is something that is inside of our Power Option Plays group. So it's a simple spreadsheet. Just do the calculations and the math. It's not difficult, but the formulations behind it are pretty in-depth. I actually couldn't do them myself at the time. The team I had could not do them themselves. We hired an outside company to do all the math for us that we didn't have to do manual operations on it. So when we look at trades, we'll get to S&P in a bit. AMD today had a great pop and go, but Rob, you don't like those trades. You know what? Normally I don't, right? But here's the thing. If we look at the SPX, right, what happened? we closed Friday in a bullish neutral bias with a rank of 2. Okay, so right on the cusp, 2, maybe 3, but I'm pretty sure we're at a 2. And we gapped today just shy. Actually, no, I was going to say just shy of bullish, but that's not true. See, if we look at where Friday's close was, and we just draw a line at that price point, right? And now we go to today. That line is where the moving average was on Friday. So we gapped up above that. So we were in a bullish bias on the open of the day, right? No real support level there other than we've got the 8 moving average there, right? So we got above that. So I was okay with a little bit bigger gaps on quality stocks. All right, I'll do that in a sec, Roman. So based on that context, we've got AMD, right? AMD gaps up, pulls back right to the 8 moving average and bounces, takes off from there. How does the intraday chart look on AMD? We got a great gap and a pullback, a little bit of a pullback. Let's look at what happened on a 1-minute chart. We got the gap up, this pullback in there. We finally broke. We retested back down in here and bounced. And guys, I'm all about the move the S&P made. So I was all over this, right? And you can see how we've moved and how the pattern has kind of failed, run out of steam a little bit. That's okay. Either you're still in this trade or if you are coming to micro day trading very soon, actually, another week and a half or so. In the micro day trading class that I am teaching, we're going to go over an advanced exit technique, one that I've only really taught. I've shared bits and pieces of it, but only really taught any of it to our inner circle group before. And it's no different with Tesla. If we go back to the daily chart of Tesla, Tesla's got a million other things going for it, right? Great. I mean, good gap just underneath the 882 level, and we just exploded from there. How did we explode from there? Well, we broke out, we retested, and we bounced, right? Yes, exactly what we're supposed to do. Exactamundo what we're supposed to do, right? Good setup in there, good overall. You could go to the 1 if you want to try to finesse it on the 1. Look at the breakout and look at right there. I mean, this line is at 349.60, right? Our low here was 349.80, 20 cents above. So we came right there, baby, just right in that range, and pow, pow. I mean, just great moves overall. Tesla coming out, Elon Musk coming out and saying he's going to dedicate more time to his businesses. He's back to sleeping on factory floors again, and in his plants. Doing a little bit less on Doge, good, bad, or indifferent. It is what it is. From a standpoint of his stocks, particularly Tesla, it is definitely going to be the right move from a business perspective. Right. On top of that, Kathy Wood's coming out again on CNBC recently and reiterating her $2,900 price point in 5 years or something because of what his dominance is going to be in the self-driving industry, but more so in the side of the business of Uber, where you don't need Uber drivers any longer. He's going to provide the cars. Uber's going to provide the backbone and the support. They're going to run it. It's going to be his cars, all self-driving, and they're going to split the profits 50-50 is the discussion. How about that? We don't have the exact profit split, but that's what's being bantered about. But either way you slice it, massive savings for Uber. We don't have to hire someone. You never have to worry about changing shifts. You don't have to worry they leave dirty cups in the car. Nothing, right? You don't ever have to worry about that at all. So, and the expectation is 2,900 on the stock price. Now, if you look at it and say, Rob, I don't believe it. I don't see it. Okay, if it only goes to half of it and it gets to 14 or 1,500 a share, doable, without a doubt, doable. I want to participate in that. So Tesla is back on my everyday list of stocks to take a look at. So guys, we're in this stock. If we're at 349.5, 350.5, and if you're still holding on to it, it's 358, call it 57.5. That's $7 move from where it was. All right. Overall, it is not a shabby day for you, even if you only had a 70 delta. That's $4, $5 up without any delta or gamma change. So overall, very nice setup. Only 2 that I got off today. It's been a busy day. Again, Tuesdays are my Mondays when Monday's a holiday. Everything that happens normally on a Monday, how busy my Monday is now becomes Tuesday for me. With meetings power hour, all of that. Another meeting immediately after this training today. So it gets to be busy, busy times. All right. So overall, not too shabby. Now I'll pop that in there for right now, Roman. Let's go see. Roman said go and drop in. Oh, let's go to nope, I need down that weekly. There we go. Go ahead and drop in a 118 and you'll be surprised. So let's go add a fib level in there of 118. Right? And we're right there. I mean, we're sitting right in on that level. Do we need it? 57, 64, 59, 64, that'd be 200. Yes, we actually do. We do need it in there. Okay. Um, yeah, really nice. Really. So we gapped that, and that's where our 8 moving average was. We had a confluence of the 8 and the 118 this morning. So real nice. Mark said, do you have a good way to correlate a stock price alert to options premium? Traded IWM this morning and my target was 207 for the stock with an alert. That is the only way that I do it. So Mark, the way that you would do this to automate it is you're going to set an order up that's contingent on a stock price. You're going to say, let's say you had your alert at 207. And Mark, I'm going to assume, I may be wrong, but we'll use this for our assumption here. I'm going to assume 207 was your trigger price, and that's what you want to get out of the trade. So what you're basically doing on that is you're going to put in a market order, right? A stop market order, right? Where you're going to close the position on the option based on the stock price. Stock hits 207, close at market at whatever the option price is. Yes, you can deal with a little bit of the whipsaw in there, or you're getting ripped off, or the market maker is manipulating price a little bit. But if you're doing it on high quality stocks, not stocks that have 4 open interest across their entire options band, through their entire options chain, then usually you're going to be okay. But that's how I do it. I don't base it on the options price, because here's the thing. So if we go to IWM for a second, right? All right. So here's IWM. I've got a resistance at 209. It's an old fib, definitely needs to be redrawn, and we've got the capability to do it now. Here, let's redraw. Since we've got the place to do it from now, let's do it now. No. We come from that pullback there. This is all sideways. That would be our swing high right there. Okay. So I've got a 210 resistance, 203 to 210 is 7. What's our fib? So 4.8. So we're $8. So I don't need to split this level in half. 203 to 210. I don't need to split 210 to 218. I'm pretty close to it. I'm going to split that one just for kicks and giggles, right? So let's go put in a negative 136. Okay. So we go back to moving averages. Okay. So if 210 is my target market, let's say we'll use my number. So let's say 210 is resistance. I'm going to be down there below there somewhere. So 209 is my target. If 209 is my target, I'm going to put a conditional order in that says if the stock gets to 209, then close at market, which is a stop market, stop you out at market, close at market my $200 call, whatever position you bought. Does that make sense, Mark? Does that answer it for you? All right. And by all means, take your time, type it in. Yes. Okay, good. You had the fib starting. I'm guessing you meant back here. And it's, Mark, this is iffy, right? This is iffy because of this pullback in here. It's almost sideways-ish, but because this is so clean in here, with the exception of the hiccup in the center, which is about where hiccups take place, we started it there. Oh, you're good, Brenda. Yeah, it's an OCO type. Well, it could be an OCO type order, Brenda, right? It's a conditional based order, whatever the broker calls it, but it's conditional based, right? You're setting up to say it's an if then order. Go back to high school math or statistics, right? It's if then statement. If this happens, then do that, right? And that's what it is. If the stock hits this price, then get me out. Because Mark, what I was starting to go at, and I missed it, so sorry. Let's say that I buy the option here. We'll use this example. Let me get a pen. Okay. So let's say I buy the $200 call and I buy it for $10. I'm just easy math. Okay. That's all this is. No real calculations. And I've got a delta of 70. Again, no real accuracy in it. I'm just trying to make it simple for us. I don't need it to be 74 or something. So we got a $10 option. We get into the position at 204. Buy to open is 204. My sell to close is 209. Okay. So basically there's $5 in there as far as difference goes, right? Between where I get in and where I want to get out. The problem is, okay, so someone will say, well, Rob, just take the delta. So if I've got a 70 delta times a $5 move, that's $3.50, right? So just put in my sell to close on my option at 13.50. Just add 350 to it. Now, you have to account for a bid-ask spread, but you have to account for a delta change. You've got a $5 move in here, which means for every $1 the stock moves, you're going to have a gamma change. Gamma is rate of change of delta. So you could have a gamma change that takes the delta on the first dollar move from a 70 to a 74. The second gamma change may go to 77. The third gamma change may go to 79. The fourth gamma change may go to 82. Fifth gamma change may go to 83. Whatever the numbers are, it's moving, right? Well, how do I calculate that and where we're going to be when we get to here on X date or X time of today? You can't. You can't. Effectively, you can't. You can guess, and that's all it is, a guess. But if I say whatever the price of the option is, when the stock hits my price, get me out of the options at whatever it's going for. That gives me the best chance of being right. And the expression "don't trip over pennies to get to dollars," that's where that comes down to. I can't get the top dollar for it. I'm not getting the highest high every single time I get into a trade. Actually, I've only had it happen. I said this recently in another training. One time where I got in at the lowest low and got out at the highest high. Other than that, never before, and I don't expect it to happen again. After thousands and thousands and tens of thousands of trades, right? With funded, not funded, tens of thousands of trades. I don't expect it to happen again. Why? Because I'm not in the game to try to get every maximum penny out of it. I am a big believer in a phrase. If you know the phrase, you know it. If you don't, it's okay. You'll get the gist. If you're walking through a field of fruit, right, vegetable, whatever, or fruit, and you're going to pick from that vine, leave some fruit on the vine so it's advantageous for the next group of people that come through. Don't try to get the last penny out of the option so that no one else wants to trade it after you. And if you miss by one stinking penny, you're going to be in trouble because now it starts to just free fall on you. Leave some fruit on the vine so when someone else comes by, there's something there for them. You got out at $13 and it runs to 14, so what? You left a little fruit on the vine. That's all it is. You're making it where it's advantageous for the next person. That to me is good common sense instead of trying to get every plug nickel. Look, you can treat tenants in your house like dirt and charge them ridiculous prices for rent. And I'm not against charging a fair rate for rent at all, right? But if you treat them like dirt and expect that they're going to do the right thing for you when they leave the house or, or how they leave your house. Look, I had a tenant that just left our house in Florida. And when it was all said and done, he didn't have to. He sanded and painted every wall in the house. That wasn't part of their lease, right? He just did the right thing, right? He was allowed to paint. He got permission to paint his own colors. He didn't have to paint them back over. I was going to do that, but did it all, right? Why? Because I treated him good. Did he get raises? Yeah. Did he get big raises when we had these crazy inflation numbers? Of course. My costs went up, his costs went up. There's nothing I could do about it, okay? But I treated them right, and they did the right thing when they left. It's no different on a stock. Don't try to get the market maker and say, "Ha ha, I got you," and you just crush them. It doesn't work well because all things have to do is slip just a tiny bit, and you can't get to your price, and then that's when you start to see price drop drastically. So, Mark, I don't know how the gamma is going to change, I don't know if Vega is going to kick in volatility and cause an increase in gamma, or implied volatility kicks in if the market maker sees that it's running near a pivot point and they start to open up spreads on the bid ask. We can't account for any of that, but I can account when the stock is at 210, the stock is at 210. I can figure that out. So if we can get to that level, get me out of that price. Mark, is that okay? I know that works. Good, good. I hope it helps. All right, let me take this off. Yeah, leave. Yeah, there you go. Leave handfuls on purpose. Exactly, Brenda. Yep, yep. Let's make sure we didn't miss anything. Okay, we got it. Good. All right, let's go back into the presentation and let's go look at economic reports. So let's go pull up Forex Factory. Here we are on Tuesday. So Waller spoke, nothing crazy there as expected. Fed tomorrow, minutes at 2 o'clock. Big report, right? Keep your eye on it. It's not, are we going to raise rates? Because that's not happening. I mean, the low rates, that's not happening. I don't believe. But what are they saying about when we're going to? And that's tomorrow. 10 o'clock tomorrow, you got Richmond Manufacturing Index. Not that big a report. It's orange. Thursday, 8:30, we've got two reports, unemployment and GDP. And then you got another GDP index here, which is a quarter over quarter. Same time, but these are pre-market. Unless you're trading futures, it won't affect a trade you're in, right? Or you're holding overnight, of course. And then 10 o'clock is pending home sales. Once again, I don't see this as a major concern today. This is not, oh my goodness, home sales have picked up drastically, or oh my goodness, home sales have dropped drastically. Now, you have to be cautious and you have to start looking at markets. If you listen to a Robert Kiyosaki, he's been saying for almost a year that we are going to see a massive housing crash. Now, he seemed to indicate it was going to happen a little bit sooner than it has. But then you got Grant Cardone out there saying the exact same thing. You're going to see a massive housing crash. And even when they lower rates, the expectation from the average person says price of homes is going to go up. And there's such a glut right now of inventory that people can't sell. They just can't afford to. They're at a 3.5% interest rate. They want to sell so they can move, right? Or need to sell because they already bought somewhere else, but they just can't afford to sell at what they're going for now with the rates and everything else. So they're holding on. So the belief is as rates come down, you're actually going to see a war to the bottom on price, a price war, where people will be lowering their prices to be the ones that pops up on the top that says, ooh, ooh, pick me, right? Right, wrong, or indifferent, I don't see today as being the day that we've got a housing concern, right? Are there places in the country that are hot? Yes. There are places in the Midwest, places right now that I am trying to buy properties. And it is insane that they're listed for 2 and 3 days at best, and the deal is closed, right? That's how fast people are moving. And for me, we're pre-approved on every penny that we're going to do on the type of loan that we're taking. We're pre-approved for multiple homes, right? So there's nothing. It's find it, get someone in there to look at it, and lock it up. That's all it is. That's every bit of it. But I don't foresee right now being the concern of housing. So is home sales going to be an issue now? Friday we've got core PCE, which is price index at 8:30, and then 10 o'clock is consumer sentiment. That's a big report for Fed, although the Fed announcement will have already been out, but that's a big report for Fed. One thing to keep in mind is we do have an OPEC meeting coming up on Sunday, right? And it's all day. OPEC is oil producers, right? That's the Saudi Arabias of the world and so forth. Right now, energy is held steady. We're not seeing any major climbs. I think we should be seeing drops. I think if we can get Russia and Ukraine settled, you'll see an instant drop in price. But could the OPEC group set back there on Sunday and go, you know what, we need to cut production by 20%, by 10 billion barrels a day, whatever the numbers are, right? Could they do that and artificially drive prices up? Yes, less work to make the same money. That's really what it comes down to. So yes, without a doubt, will people do more of, less driving because of it? Maybe, but I got to drive to work. I got 22 miles to go to work. I got to drive to work. What am I going to do? I don't have a choice, right? Unless I happen to live in a place I can take a train. So you're going to do it unless you're in New York City where they charge you 50% more because you drive to work during the day in the main peak hours, which I think is like 21 hours a day or something they charge you for it for coming in. So OPEC could be something of importance come the announcement. I don't know. But Rob, it's Sunday. Yes, it's Sunday. And if you are a savvy trader, I think was it Mark that said CL before? Who was it that was trading CL? Darryl, sorry. So Darryl was on CL before. So if you're a savvy trader like someone like Darryl who's trading crude oil, now you got this announcement coming out and crude oil opens up on Sunday evening at 6 p.m. or so, then yeah, could you take advantage of that over the weekend? Yep, you sure could. Sure could. Okay. All right. Keep your eyes open on it, folks. I mean, every day you should know what's happening on your day today. Right? Today's trading day, Tuesday the 27th. You should have every one of these economic reports should be something that you knew about before it happened. Never, and could you make them where you could see every report? Yeah, you can go to yellows and grays. Yellow is low impact, gray is silliness, right? Really doesn't seem to matter much. So a lot of reports. And you'll see Thursday, 8:30 in the morning, we've got a Fed member speaking, and then we've got another one speaking at 10:40. We've got three of them speaking at 2, 4, and 8:25. There you go. Dow said I would definitely keep an eye on that meeting Sunday for oil. Yeah, and the thing is, it's an all-day thing, Dow, so you never know what, if anything, comes from it. But if you hear something, if you're watching financial news, or you go and set an alert up on price, on well, it'll be closed at the time. But if you're looking at news, and there are sites that you can watch crude all day long. But if you're looking at news on it and the price starts to tick up or down, there may be an opportunity there for long or short on crude oil. Um, um, Mark said, I paper traded PLTR, but didn't wait for the bounce at the 0.38 mistake. I'll probably get stopped out. Um, yeah, so here's the thing. That's the way that I tend to trade a market is I look at that bounce is critical for me, but it doesn't mean it's the only way to trade. It's just the way I like to do it. I have a good friend of mine that's an absolutely amazing breakout trader. He takes a trade and like, why would you take that? He goes, why would you not? That's a killer trade. I'm like, I don't see it. He goes, I know, but I do. He said, just like I don't see you waiting for a pullback. He said, it's too boring, too lazy for me. I want to be in that action. He's crazy dude, right? Which is when it comes to things he does in life, right? He's a crazy dude. So, but he's good at it. And that system works well for him. This system of a pullback works well for me. Doesn't mean breakouts are bad. Breakouts are bad for Rob, right? If you listen to all of the health gurus today, the Dave Asprey's of the world and the Gary Breckers and all of them, they're telling you salt is good. Salt is good for you. Salt is good, right? And not salt meaning table salt, but the right um, sea salts, right? Baja Gold is what I've been found to be the best one of all. You should take more salt, take more salt. Stay away from the table salt, the iodized stuff. Stay away. That's bad. It's bad. I take more salt and I get messed up. My body does all kinds of funky things. Why? Because my salt ducts, tracts, whatever the tract is that salt travels and doesn't work well in my body. Right? So it doesn't matter how good salt is for you. I have to keep my sodium intake cautious with it. I used to just drop a half a teaspoon in my water in the morning. Can't do that any longer, right? It doesn't work well for me, right? It's finding what works best for you, for your body, for your trading system. We're talking, right? For your trading system, finding what works best for you and doing that. So hopefully you're not stopped out. That mark on that. Hopefully it doesn't. Let me just set these back. Apply. Okay. All right, good. So let's go back into our document. Market review. So let's go look at the S&P 500. Right. So I've got a brand new fib drawn on the S&P. Let's go there. Come on, baby. All right. So we put in a negative 236, which Roman pointed out to us. So I appreciate that very much, Roman. On top of that, that means we're also going to need a negative 136, not just 118. Let's go add that. Okay. So here's the good, the bad, and the ugly. I love where we are today. Big gap up today. I took 2 trades on this gap. They were two gap trades. If you are a subscriber to Trade with Rob, inside of Trade with Rob, there is, and it's free. In our members area, I have an over an hour long, hour and a half long training on how to trade what we call a switchback trade. I did an advanced training on top of that called a high volatility switchback trade. When you get gaps, basically, big gap away. I went back to old documents that I have from old trading systems back from 1999, 2008, 2019, to when we had these crazy volatile times, and how was I trading them, and what worked, what did not, and the likes. And the trades that I took today were based on that system. Now, 6 months ago, I wouldn't take it. This would have been a day off. I would have walked away, big gap, up or down, S&P, go do something else, right? Unless you get something that's just kind of moving along, not gapping along, go do something else. Today, a little different, right? Today, I'm very, very, very hyped up on this type of a setup. We got the gap of the S&P, and we got it with purpose. What do I mean by that? We got a good gap up above our 8 moving average, in this case, above the 118, right? We got a little bit of a pullback to it. Everything I like to see happen in there happened in there, right? My stocks did the same type of thing. There were other stocks that gapped up like that today that I did not take advantage of. CrowdStrike was one of them. CrowdStrike was on my list. Look at that, gapped right there. But when I go to a 5-minute chart, I just didn't have it. I go to a 1-minute chart, I didn't get it. I gapped up and I failed. I gapped up, I pulled back, ran here, gap. Woo, that was nice. I missed it. I don't take those types of entries, right? So it's not that everyone works, but I'm more confident in it. And look, I'm doing this now since 1997, right? Teaching it professionally since 1999. Tens of thousands, 100+ thousand people through my trading career being taught. Do I still discover new things all the time? Does something old, something new, something borrowed, something blue, right? Does something old come back into fashion again? Yep. That's my grandfather. Kept every dang tie he had from 1920s. Why? Because he knew someday they'd come back in fashion again. He wouldn't have to buy them any longer. He already had them. He just didn't count on the moths eating them up. And they had nothing left of them by the time that came back around again. But you get my drift, right? You've got to find a system that works, and things are going to change. Things are going to change in the markets. You're going to change as a trader. You just have to find what works best for you and your trading style to allow you full autonomy to trade the way that you want to trade. What can you do to be successful in the arena of trading? Right? And it's not trade exactly like I do, or Brandon, or Tony, or Amelia, or Trip, or anybody else. It's taking the pieces that fit and building out a system around you. It's as easy and as complex as that. Now, please, I don't ever mean ever, and I mean ever mean to imply that trading is easy, because it is far from it. It's one of the toughest things you'll ever do in life. Solving world peace might be easier than trading for some. Okay. So I love where the S&P is at right now. Right. Great moves. Right. We're nowhere near our all-time high, which is back here. You can see there's a little box drawn to it right here for this high. Right on Feb 19. So, but we are in a nice bullish position right now, bullish bias, right? We're at a rank of 3 if we were to close here. I would not mind a small move back tonight, but I don't really want to see much. Tomorrow, pull back 58.66, 58.70, somewhere in there, pull back to there and bounce, right? $6,000 index, we're a couple bucks away. I got no problem with that. As far as I'm concerned, we crushed it on that level, right? On hitting that level. And then we take our bounce. That gives us 59.68 as resistance from just call it 58.68, right? It's about a 100-point move inside of there. We've got a lot of opportunity there for movement to go. So will I be happy with a move like that? Yes, but it's not about today. Today it's where it closes. The move's already happened today. I'm not trying to second guess what's happening tomorrow based on today. Today's got to close and tomorrow's got to be in pre-market for me to make any analysis of what I think is taking place. And for me, it has to pull back to the 58.66-ish level and bounce from there. And if it does that, then we're looking at that 59.68 as our next resistance level. If it fails and we get a bearish market tomorrow, right, we've got a clear path down to 57.64, which is where our 21 is. So all over it, white on rice, baby, of buying puts if that's what it does tomorrow. How do you assess the difference of a rank 2 and a rank 3? So a 2, Mark, says we close with near a fib line. A 3 says we don't. All right. So, and the easy way to look at it, let's get something that's got maybe a little bit bigger lines on it. Okay. That's a little bit wider. So if we look at this right here, 407 to 425, right? Close enough. Okay. I'm going to split this up, Mark, and this is exactly what I use, right? I'm going to get rid of some lines in here just to make this easier for what we're trying to accomplish right now. Okay. So this one here, this first line is 25% of the overall distance of these two lines. So if you measure this out, and I'm going to do it rough, I'm not doing the full math, right? It's about 18 points, right? If it was 20 points, you would be $5 away from a fib line. If you're less than that, then you are, you would be a rank of 2, right? But because we're more than that, we're a rank of 3. If you look at where we closed right here, right with the fib line, that's a rank of 1, right? The stock is there, moving average is there. It's less than 25%. It's a 1. Does that make sense now, Mark? I know I saw that question before. And thank you for putting it back in, because sometimes I just get on a roll on the topic I'm talking and I miss things like this in the chat. Let me know. I'm going to delete these off of here. Yes, you think so? Okay, good. So, if you're in power option plays, guys, there is full trainings on bias. Actually, we just redid this. We're redoing all the training inside of POP right now. So it's in the members there. We've done the bias one already. Okay. Okay. Let me keep going. It's getting a little bit late. All right, let's go back in here. So what do we got coming up? We got Mastermind Group coming up tonight. Monster Market Movers comes up tomorrow. Trading You is on the 29th, which is Thursday. Inner Circle, again, next week. And then Micro Day Trading on June 4th. 1, 2, 3, 4. Wednesday of next week. Micro Day Trading, that is at 8 p.m. Guys, patterns emerge all the time. Trading systems, if any of you have ever seen these shows that are like math people, right? Numbers is one of them that comes to mind, right? I love the show, but then the guy is thinking, and all of a sudden you can see the math and the geometry is showing up on like in the air in front of him, and or one I'm rewatching now is called The Librarians. Librarians, the one where there's 3 librarians in it. Anyway, and the woman is, she's a genius when it comes to math, and she sees all this stuff popping up in front of her, right? That's what happens for me with trading. Not the math stuff, because I'm not very good at math, okay? That's what calculators were made for, not for me to do the work, okay? Micro day trading is a pattern that I recognized about 3 years ago now. And I've been perfecting the way that I trade it. And it is an opportunity to analyze the highest probability of getting out of the trade. Does it always work? Absolutely not. It's not 100%. It's the highest probability of getting out of the trade and not giving back on the trade. Ed said, how do I get into micro day trading class? Let me see. Did Andrew drop a link in there? Yeah, so there should be a link that came in just before your post, Ed. That Andrew dropped in, that you can go ahead and register for that. You can just put it in again if you didn't see it. Okay? You're welcome. Guys, look, I think that this is so important This is I'm calling it a 1 hour class. I don't know if it's going to last longer. My expectation is yes, it will. I don't know, but I do believe it will. We're going to go over all the components of the trade with the most emphasis being on the exit component. Okay. So you'll basically have a full trading system when it's all said and done. And our standard for something like this is somewhere between $100 and $200 for this training. That's standard of what we normally do. This is $29 for the training. And if you don't believe me, don't get it now. Wait until afterwards and take a look at what the price is going to be. It'll be $90 for 30 days after that. Okay. So this will be the least you will ever pay for it is right here and right now at 29 bucks. Am I making a killing on it, guys? By the time we pay for all the work that's going into it, I think the admin will make more than I will. Right? No question. The admin will make more than I do. It's not about that. This is kind of the give back for the year. This is the one that I'm going to do where I think I can change some lives for people on this system. And no matter what, you're not going to be in a situation feeling overwhelmed because it's one trading topic only. And even if you sit there and go, yeah, I kind of been doing that already all along, you're not going, man, that was a waste of my money. It's $29. It's like Starbucks for two people for one time, one trip, right? You and your sweetie, you're buying Starbucks for, right? Maybe you get a scone in there too, maybe. But that's coming up on June 4th. Pop covered call E-mini are on regular schedule. Pop will be done tonight because Monday we were closed. Power Hour Training Coaches Playbook are also back on schedule. All right. All right. Weekly training topic. Such a deal. There you go, Mark. Such a deal. All right. Building a recession-proof trading system. Here's part of what I run into that I see that individuals are doing and maybe making a mistake with how they do it, right? And if you go and look at the rinse and repeat method, I am not opposed to that. I love finding a system that you can do over and over and over and over and over again, right? And in business, you can't rest on your laurels and say, well, everybody knows my name, or the company name or the company product, so we're good forever. No, right? And in business, many times I've seen it when I was in manufacturing. Things get tough. What do? They stop advertising. They lay off what they consider to be non-essential employees, like who? The janitor. So the employees that you want to keep happy are no longer getting a clean bathroom or having paper in the bathroom to use. None of that's happening because no one's doing it, right? So how well did you do by getting rid of that very low cost employee? If you're at the point that you need to lay off the janitor, you may have a much bigger problem than the janitor's salary. Okay. So when you look at building a recession proof system, people get comfortable and they run it and then they stick into a system and they never change. Even though the market changes, they never, ever, ever change. There's a trade called a chicken trade. And if you know option strategies, it's called a strangle. So you're strangling the market. You don't know where it's going, but you do expect a movement up or down. You just don't know which way. You buy a call, you buy a put out of the money. If each of them costs you $2 just to make up a number, means you've got $4 in the trade. Market gaps, let's say earnings is what cost it, market gaps and drives the price of the one option, let's say gaps up. And the call option is worth more than $4. Why $4? You bought the put for $2, you bought the call for $2. It's worth more than $4, you made money on the trade. Right? Great system until the market maker figured it out. And the lead up until earnings date, right? The lead up into earnings date, this is the price of the option 3 weeks back. And let's say an option would be worth $7 at whatever it was, right? And you start to see this happening. And on earnings date, that same option is $13. Then what happens? The announcement comes out. It's not a big deal, up or down. This option goes right back down to $7 right after the announcement is done. Wait, what just happened? Where'd my $13 go? Yeah, you lost it. Right? Market maker figured it out. They start jacking prices up into the earnings. After the announcement, they cut the legs out of everybody. And you watch prices drop drastically. Chicken trade, don't work no more. Don't do it. Not for earnings. Doesn't work that way. Not any longer. Okay. Are there other things like that? Yes, you run into this type of stuff all the time. Iron condors is an amazing strategy. Amazing strategy. But when the market starts spiking and the IWM, the rut, right? Rather, the rut starts going wacky crazy one direction or another, or whipsawing all over the place. I don't mean sideways movement. I mean, up 40 points, down 60 points. It's all over the place. When that happens, it's not a good time to be doing iron condors on the rut. It's not. Right? When volatility of options prices gets down to 10 and 12 and 14, and you're trying to sell credit spreads, you may not be getting enough premium without working really hard to find it, right? Certainly not on diagonals. All right. So what do you need to look at? I think you really need to look at, I think you need to look at things in the format of baskets. And, I'm not going to draw this in any great fashion whatsoever, right? But I think you need baskets. What does that basket mean, right? You could have a basket. Your first basket, as an example, could be real estate, RE, real estate, okay? That's a basket. You could have high yield savings, right? You could have a basket that's of gold. And I don't mean like a pot of gold that's gold, G-O-L-D, not G-O-D. I mean like a pot of gold. I'm talking about you could have gold positions, whether it's physical gold or ETFs or the likes, right? Crypto. Something came across on Fox News today. My wife and I were in the kitchen having breakfast, and we were talking, and it was on in the background. We really weren't paying attention to it, but she heard them talk about Bitcoin. And she said, "Don't we own some Bitcoin?" And I said, "We do. We do." And she said, "Well, they said something about $110,000 per coin. Did you actually spend $110,000 to buy one coin?" I said, "No, I did not." And I'm actually opening up my Robinhood app right now. I did not spend that. When I bought Bitcoin, it was $19,649.43 per coin when I bought it. Okay. So have we seen some increase in our position? The answer is yes. Right. And then her immediate response, by the way, was, should we sell it? No. Kathy Woods is calling for it to run to $500,000 to $700,000 per coin. There are only 1 million Bitcoin left to be mined. After that, you cannot get any more. Then supply and demand kicks in. You want to buy it? Somebody's got to be willing to sell it. I think that's when you will start to see very large bid-ask spreads take place in there, right? But even that, I'm up 500, almost 450% on my crypto, on my Bitcoin, where I'm only up 100% or something on Ethereum, whatever the number is. It's not quite 100, 80% or something, right? But it's diversified. That's why it doesn't say Bitcoin, it says crypto, right? I think you need to look at some long-term holdings, right? Which would be covered call positions, right? Here, I will give you my simplest covered call strategy in the world to do. You're going to go ahead and you're going to buy. You do this with two different positions, SPY or QQQ. I like SPY. Okay, volatility is less than. Buy SPY. 100 share increments is what you need in. When the SPY, which translates into the SPX, is down, and I'm not talking about it's just down a couple of points today. It's moving down today. I'm going to go ahead and I'm going to sell a covered call for today. And I'm going to look for about an 8 or a 12 delta. I'll pick up 10 cents on the option. And there's a 8 to 12% chance I'm wrong on that trade. So that means, 90-ish% of the time, I'm going to make money on that trade. 10% of the time, I'm going to be giving it back, right? Which just means I sold it for 10, I'm buying it back for 15, 20, whatever the numbers are, okay? It's only a day trade because options on SPY expire every day. So sell the covered call only when the market's going down. Market starts turning around, you sold it for 10, it's now worth 6, it starts to climb, it's now worth 7, get out of the trade. If it looks like the SPY is bouncing, good news has come out on the market, get out of the trade. Take what you got and call it a day. But some kind of long-term holdings that you are either holding for growth but hopefully you're cash flowing at the same time. Again, like the if you're holding Meta or if you're holding Amazon, hopefully you're writing covered calls. Tesla, hopefully you've been writing covered calls. All the way down on Tesla, you write covered calls. Why not? Right? And then you've got your trading systems. Like what? This I'm talking about options. Options. What does that mean? Right? Your directional options trades, your iron condors, your naked puts, your whatever strategy you are into, that's what that is. But that system, to be recession proof, you cannot rest on it and just say, you know what, I'm going to, I found a system that's working, or I'm going to duplicate somebody else's, Rob's, Brandon's, whomever, Trips, Tony, I'm just going to duplicate somebody else's system and do the same thing. It doesn't work that way. That's like saying, I'm just going to throw the pitch just like Tom Seaver. I don't know. I just can't think of somebody else right now. Tom Seaver, great pitcher, right? I'm going to pitch just like Tom Seaver. How? How are you doing that? Well, he shows you how he throws his curveball. That doesn't mean yours is going to break the same way. 1/1,000,000th of a millisecond difference of when you release that ball makes a huge difference. Look, I'm a bowler. I love to bowl. Okay. And if you got the pins set up on the alley and they're down here, right? This is the head pin all the way back to the 7 and 10, right? And you're bowling down here, and this is the width of the alley, right? My ball goes down right about here. You know, that far over from the right gutter. And I stand right about where I've got this dot right here. But my brother stands here and he throws it here. And many times he completely misses the pocket and it's over there. Right? Well, why don't I just do what he does? He's got a better average than I do. I can't bowl that way. I can't get my ball to break that way, no matter what I do. I just can't do it. Right? It's not right. It's not wrong. I have two cousins that were, well, one that was semi-pro, another one that should have been semi-pro in bowling that I bowled with them for years. We were at their house every weekend. I bowled them, and my uncle managed the bowling alley. So we bowled for free all day long, literally. Right? And my cousins have tried to show me how to do, I can't get more of a break on my ball. Right? It is what it is. Don't try to duplicate what everybody else is doing. Make it work for you. But recession proof is not about having just one, and that's what it comes down to. I want a stool, right? I want a multi-leg stool, right? If I have a one-legged stool, options trading, I'm going to have it fail on me, right? If I have a stool and you've got stocks and options and some crypto and some long-term holdings and some this and some that, well, if one of my legs goes bad, that's okay. That's okay. Right? I've got other legs to rely on. And that's what you need to do. You need to get to a point that you don't have just a singular based system. And at the least, doesn't do much for balance, but at the least you need to have two legs on your stool. And that should be day trade and swing trade. DTST, day trade, swing trade. At the least, you need to have those two. This would give you an opportunity that when the market is picking direction and moving over X period of days, you can hold on longer and capture those much bigger hits. When the market gets crazy, nutty, silly, stupid like it is now, excuse me, you can capitalize on the day trades, get in, get out, and call it a day. All right? So hopefully this helped, but just get away from the singular trading system and always, always, always be looking to improve it. Always. With that being said, I want you to focus on one trade, but you've got to build it up to the point that you're confident in it. And you're constantly looking for what can be different in it. And you test it. You test. You should be testing everything, right? There's a phrase, I forget who said it, but what you measure matters. What you measure matters. I measure everything. Everything. Right? From a trading standpoint, from a health standpoint, I've got more wearables between my Oura Ring, my Fitbit watch, my CGM. I am measuring everything. I could tell you how a piece of watermelon affects my body. I could tell you how a 15-minute walk affects my body. I know everything. You need to know that about your trades too. Right? Okay. Give me some candidates that y'all want to look at. Looks like we're going to make it through the very end today. My electric shock therapy on my back is holding up, so I'm doing okay. So what stocks you want me to take a look at? Let me bring this over here. Let's switch over to all symbols. Makes it much easier for me. Figure that out. All right. WFC. What was that? Wells Fargo. Okay. So I don't have a fib on there. So I'm going to, Dennis, I'm going to move over to a template that has no moving averages on there, just for the first one to show it. I've got a V bottom here. I've got another one, a big move up here, another V bottom here, another V bottom here. I'm going to work off of the lowest one in that range. We don't have a really big move here, so we should be fine. I'm going to work off of here. That move right there, is that where we draw to? The answer is no. Here's why. I did not pull back to the 236 or near it. So that's not enough for me. So I'm going to come on up, bring this up here. And now, by putting it up here, we did make a pullback to the 236. We're looking at 72 to 76. That gives me $4. I have a Fibit in here of 360, so I need to split that level in half. It's actually a little bit more than 4. So I need to split that level and the negative 272 in half. So give me a negative 136 and a 118. Bueno. All right. I'm going to go back to moving averages. We are in a rank of 3. We're in a neutral bias rank of 3, and the middle of nowhere means basically I would do nothing with it until we get above the 77.44. Break up, retest, bounce, and 76.58 is resistance. Not enough room for me, and that's just because Wells Fargo doesn't move enough for my taste. But other than that, Dennis, that's where I would be putting it, and that's what I'd be looking at for it. So I hope that helps. GLD is the next one. All right, so big gap down. We seem to get some disparity on gold when Bitcoin has a big move, today moving up to the 110 level. Big disparity. All right, so we had to pull back to the 8. I'd love to see us back above the 307 there, Brenda. Right, wrong, or indifferent, I don't know. I'm just not happy with the overall move we've had in the last couple of months. And we've got to be cognizant of, we had what was, I believe, an all-time high right here. Yep, see, all-time highs right in there. But lower high, and now what looks like, again, a lower high. Low, lower low. That means down here somewhere on our next low. So caution on GLD. SPY. All right, so we probably need to redraw SPY. I'm going to do that. I'm going to look at that this evening in pop. But we've got previous fibs to work off of. Good bounce in there today. That 588.66, that's right about where we are now. So can we get above and close above? If so, 598 is resistance. Right? And if it fails, we're looking at 581 as the failure point. That's our support. And then the Qs. Okay. So on the Qs, we don't really have the pullback we need yet. It's just not there. I don't think so anyway. Yeah, really didn't pull back enough. 500, 522. Actually, we will need a Fibit in there, so that should fix it. Right, so let's go in and put a negative 136 and a 118. Okay, negative 136 and a 118. So in an ideal world, I'd love to pull back to that 511-ish level, 513, somewhere in there, pull back and bounce with 522 and a half as resistance. Beyond that, break the 522 half, retest and bounce, and 535 half as resistance. So we've got the opportunity on it, for both positions there, right? So I do like it, but we're not in a good spot today. The gap was great, but we still need a better setup yet than we were at today. So, and with that, I think we're done, folks. Hey, appreciate you being here. I'm going to leave the room open a couple of minutes. Andrew dropped a couple of links in there, such as for the upcoming micro day trading class, and the likes. Trade with Rob, which is a free training. Get in there and take advantage of these tools, folks, while they're available. So I will not be teaching micro day trading anywhere outside of this class. I won't be going into any of the details behind it, how we do it, why we do it. You may hear me say it was a micro day trading exit, and that would be the extent of it. The only place it's going to be learned is inside of this training. So the $29 is just to get you to commit. That's all it is. It's not breaking the bank for us. So with that, everyone, have a great rest of your day, and I will see you all in our next update, folks. Take care. I will see you soon.